Hello, welcome to Markets in Focus. I'm Sean Allen, and today I'll be walking through some of the most interesting financial market themes that I've been observing. And we'll start with where the week began, and that was with retail investors buying the dip again. The S&P 500 opened up about 1.1% below Friday's close on Monday morning, but within a span of about 3 hours, those losses had been completely reversed, and retail investors put a net $4.1 billion into equities within the first 3 hours of trading. This was the single largest flow into equities from retail investors looking back over the last 10 years, according to JP Morgan's data. But it's not the first time that retail investors have bought the dip. Liberation Day on April 2nd, the following 4 days, S&P was down about 12%, yet retail investors put about $8.8 billion into US equities over that period. So it's really interesting to see retail investors putting money into equities when the quote unquote smart money from institutional investors or hedge funds even are on the sidelines or potentially even selling through these periods. Now, one of the key themes this week that has been largely talked about is Treasury yields being on the rise. So we saw the 30-year Treasury yield move above 5% for the first time since October 2023. Now, that was partly due to the Moody's U.S. credit rating being a downgrade being a downgrade, but there was also a 20-year Treasury auction that occurred on Wednesday that was quite lackluster. I would say one of the largest reasons that we're seeing Treasury yields on the rise is concerns around U.S. spending, government spending. The budget bill that Trump is proposing could potentially worsen the budget deficit and would require additional debt issuance by the U.S. government. Now, switching gears, I want to talk a little bit about the economic front here. So what we have is the coincidental economic indicators versus the leading economic indicators from the Consumer Conference Board, and we have a ratio of those two. Now, coincidental economic indicators are things such as payroll employment or U.S. industrial production. They're a measurement of where the economy currently stands. The leading economic indicators such as S&P 500 and consumer expectations are forecasts of where the economy could likely be heading in the near future. Now, when this ratio spikes, like you can see it has here, that means that the current economic conditions are significantly better than what the forward-looking data is telling us. And historically, that has pointed to a recessionary period, as you can see, looking back to 1960. Now, that is not necessarily a base case from our perspective. However, it is interesting to note what the impacts of these tariffs are going to be when we look at businesses building up inventories and consumers are concerned about rising prices. It remains to be seen exactly how that is going to play out from an economic perspective. And lastly, Trump confirmed plans to build a Golden Dome missile defense system, but by the end of his presidency within the next 3 years. It seems to be a sort of blend between the Strategic Defense Initiative and the Israel's Iron Dome program that they have built. Initial talks are that it'll be about $175 billion of cost from the US government, with $25 billion up front in the initial investment and then $150 billion down the road. However, I have seen estimates from outside sources from outside the US government that have pointed to being much more costly than that. It again points the picture of how much the government is spending and the additional debt issuance that might be required for that and concerns around treasuries. But in terms of companies that stand to benefit from this potential program, SpaceX, Elon Musk's SpaceX, has emerged as a front runner to help build this, as well as Anduril and the software company Palantir as well. With that, thank you everyone for watching, and we'll see you next time.